Let's go back to today's virtual meeting of OPEC and non-OPEC ministerial meeting, which has reaffirmed the decision of its earlier meeting in April last year by reconfirming the production adjustment plan and the monthly overall production of 400,000 barrels per day for the month of February 2022. The meeting also extends the compensation period for some members until the end of June 2022. The next meeting of the organization has now been fixed for the 2nd of February. Joining me for a discussion to this latest development and what it means for the markets is UCHENNA Minnis. He is the managing partner at Minnis Asset Management and the global market strategist. Thank you very much. Good evening, UCHENNA. We appreciate your coming through on the show tonight.
Thank you, boss, and thank you for having me.
These decisions by OPEC consistent with, are you in tune with this decision to hold the 400,000 barrels into the market next month?
I think it's a very sensible decision, really. And one thing that we can't take away from the management of OPEC and OPEC Plus, basically, is the fact that they've maintained their calm. They've been very, very cautious. They've been very, very precise in making very key decisions. They sort of avoid knee-jerk reactions, really. And we can see a clear indication with oil prices and how stable oil prices have been in the past year, really. And then I think an increase in production of 400,000 barrels per month is quite indicative, and I think it's well deserved, given the sacrifices these member countries have had to go through during the period of the pandemic and all the risk variable during this period.
But how will the OPEC decision and outlook on the demand side play into the rest of the markets and the global economy for this year? The whole idea was that, look, we're still trying to shake off those coronavirus pandemic impact in the aviation, logistics, supply, tourism, hotel, leisure, hospitality, and all of that around the world. All of this are still out there in play. So how do you think this decision play into that?
No, I think from perspective analysis, really, we are at that point where we're just going to get to increase in business and economic activities. Really, the time of total lockdown and shutdown in global economies and also global operations is far behind us. And you can see from this current variant, the Omicron variant, you can see that countries were not necessarily in the haste of having any form of drastic, significant lockdown, really. They were just some sort of restrictions and some sort of policies just to curtail and sort of hold on the spread, really. But no one is going to take that draft. And I think OPEC has put that into consideration and have understood that we're just going to get to the point where we're either going to maintain current business and market activities, or we'll get to an increase in demand activities going into the new year. And on the basis of that, I think 400 increase in the production of 400,000 barrels per month is not anything excessive, really. I think it's quite cautious, and I think it's a very sensible and wise decision, really.
But what is your outlook, UCHENNA, on Nigeria's production target as contained in the New Year budget and what OPEC released today?
I think we are at that point where this is beneficial for us. But again, the question is, do we have the infrastructural framework to ensure that we could even meet the 1.7 barrels that we are now having as our own quota to meet at the moment? But I think that's where the problem comes in. When we start to go into the nitty-gritty of our infrastructures, we'll find out that we really might not be able to meet that quota at the end of the day. So an increase in production quota is ideal for a country like ours that needs to increase its generation of FX. But then again, when we go into our framework, we realize that we might not be able to even meet this production quota. But again, for us, we are also very, very, we are at that crosshair level whereby the pricing, Brent is currently trading around the $80 mark at the moment, and any further increase might start to give some sort of negative feedback loop in terms of our ability to now continue to maintain such supply at that pricing, really, because then we have that consumer feedback whereby a higher price would always just affect the pricing, generally speaking, and the demand capacity of consuming nation.
You're an international market strategist and a trader, so you understand that oil market plays a significant part of whatever you're looking at on a daily basis, on a minute-by-minute basis. So I'm sure if you're keeping an eye on currency or any other assets, you're also looking at those key benchmarks, as it were. So do you think the initial scare for the markets around the Omicron variant has fizzled out? How are the markets kicking off the new year?
I mean, it's fizzled out, and you rightly just said it. It's fizzled out right now, and we know oil prices and oil as itself really is regarded as a riskier asset. And given the fact that OPEC, non-OPEC, and OPEC Plus really have highlighted that there is a lot of stability when it comes to this, and on the basis of that, we could see market participants and investors alike sort of trading with that bullish momentum. We could see that on risky assets with the S&P, the Dow, and the Nasdaq trading significantly higher to hitting record highs, even going into today. Really, that's just saying that the optimism in the market is saying, well, yes, this is like our new normal. There are going to be variants from time to time. Or however, I think they are now thinking that this is a thing where everybody just needs to deal with, get your vaccine, get vaccinated, use your mask, and do what the necessary is when it comes to the restrictions and the policy they're putting in place by the health professionals. So it is our new normal, and the adjustment is what we're getting to see in terms of how risky assets are being traded in. And then there's a lot of optimism and risk on sentiment, and that's what we're seeing in the market at the moment also.
In terms of risk sentiment, where do you think things will play out as we're getting off into the new year? Where do you think the soft side of the market to look at?
No, so I think oil is still going to be quite bullish. I think we can see into the new year another $10 in barrel per increase in oil pricing. So 1995 thereabout can still be a play we'll get in this year, and that is going to be a thing really. And we'll get to that point, as I mentioned earlier, where we will see significant increase in business and market activities, and on the basis of that demand just drives into the system and continue to push prices higher. We are also going to see better currencies trade higher on the back of this risk on sentiment we're seeing into the market. Really, and risky assets are really on a good place to play right now, and investors are just going all in. And when you get that risk on sentiment and the driving liquidity, there is that ripple effect into the cryptocurrency space, given the popularity now of this digital currency. So we'll see that also play out going into the new year. So I see right now, boss, it's just bullish, really. Until something change, and when I mean something significant change, and there is a significant shift, maybe the Federal Reserve do something drastic, and other top G7 central banks do something drastic. But for now, I think it's just a bullish sentiment across board.
Well, thank you so much, UCHENNA Minnis at Minnis Asset Management and Global Market Strategies. Do have a pleasant evening and a great week ahead.